It's a few days later now, but before I forget, I want to recap the trade from Friday. Going into the day with the bias, I was super bullish, just given the trend the past few weeks. I feel like I've said the same thing over and over again. There's no reason to fight a trend this strong. As cliche as it sounds, the trend is overall, it's your friend. Now, zooming in on the day, so we opened and we kind of chopped around for a little bit at open. We kind of had some of these weird wonky candles right here. But what I noticed on the 15-minute time frame, we had a 15-minute fair value gap right here. So continuing the trend, I wanted to see us come down into this 15-minute fair value gap, hold it, and then continue the move to all-time highs. So I zoom down to the 5-minute, and I see that we also have a 5-minute fair value gap right here that we're continuing to hold. I see not one, but two 5-minute candle closures still holding that fair value gap. Because keep in mind, I can see here that the wicks go below that fair value gap. The wicks don't mean shit. Wicks do damage to you emotionally. What you need to care about is the actual candle closure itself, because the candle closure is actually going to tell us the narrative versus the wicks that can kind of just fuck up your head a little bit. That's why I always tell people, wait for the candle close to affirm your trade. So what do we do from here? We start on the 1 hour to find the bias. We go to the 15-minute. We see the fair value gap. We see the condition to where we want to tap into to continue the move higher. We zoom into the 5-minute. We see that it's holding here as well. Now, looking at to take an entry, I'm always going to go down to the 1 minute. I take all of my entries on the 1 minute time frame. As soon as I see these two strong bullish candles close right here, what does this show me? The whole retracement down to that 15-minute fair value gap, where the candles are just kind of choppy, they're weak, they're slow, and then immediately we get two strong bullish candles with strong closes. I know for a fact that we're more than likely going to go take out this all-time high, and that was the retracement. So I see these two candles close. I wait like a couple more points, and as soon as this candle gets to around here, I entered my position long. This candle closure right here, I didn't like it too much. It kind of told me that we were going to chop a little bit before going higher. I was really just hoping for another strong one of these candles right here to close, and that would have been great, but you don't always get what you want. So we closed this candle out here. We chopped around in this range for a minute, and I'm not going to lie, I didn't enjoy that process because I was sized pretty fucking heavy on this trade. I was very confident in it. The trend was in my favor. Just everything was really good. ES was also in a 1 hour bullish fair value gap, so I had that confirmation as well. So overall, the trade was A+. It was fantastic. This chop, you got to hold through it. And eventually, I was down quite a bit on this trade at one point. I think I was down like $450 per account. But I've been doing this long enough to understand that you have to give your trade room to breathe. It's not always just going to go skyrocket up to your take profit. And if you can't sit there and hold during drawdown, then you're never going to be able to you got to give your trade room to breathe. That's the main point I'm trying to make here. Because sometimes it's going to be the opposite, where it's going to chop around and profit for a little bit, and you're going to want to exit early and take your position, but longevity-wise, that's not going to be profitable. You're going to fuck your RR. So as soon as we chop around here for a little bit, we get this Diddy candle to the upside. As soon as we close right here, my stop loss goes to break even. I am completely de-risked. It either hits me at break even or it hits my take profit, and we pretty cleanly went straight up to all-time highs, hit it to a tick, and then we danced around like a motherfucker for the next hour. So it's super important that your take profits are actually in places that make sense, because if you would have had your take profit above all-time highs, there's no telling where we go from there. All-time highs is one of the most free draws on liquidity that you can have, and a lot of times price will just tap it and then dance around the rest of the day. So once all-time high is taken, unless you're on an evaluation and we're just really pumping, once all-time high is taken, you should pretty much be off for the day. like I said, unless you're trying to pass an evaluation and we just keep pumping, if all-time highs is hit, then you're off for the day, and that's that, unless we have targets lower. But if we're trading near all-time highs, you usually don't want to be shorting. I don't think I've took a short in the past like 5 trades. Maybe I did. I'm not sure. If we had data lows, I did, but whatever. So overall, fantastic trade. If you have any questions about this, feel free to shoot me a question in the questions channel. But other than that, that is all I have.